This is the Martini Mortgage Podcast with Kevin Martini.
Hello and welcome to episode 3 of the Martini Mortgage Podcast. This episode will provide a kind of mashup from the May 2018 edition of the Martini Angle. To see the full episode, you can go to martiniangle.com. Now, there's going to be a ton of things that I want to share, and I know that you all want to hear it. So let's start pouring this cocktail. As a primer, I think you need to know what the heck the Martini Angle is. The Martini Angle is a comprehensive walkthrough of the most up-to-date information regarding the real estate market and other information that one in the real estate arena or someone that is thinking of buying a home or someone who's thinking of selling a home needs to know. Now let's go back to January 2018. You see, in the beginning of 2018, there was much fear about the housing market. Many people thought that tax reform was going to signal the death of this recovery, and people would no longer have interest to buy a home since the standard deduction basically doubled, and there was concern about SALT. SALT is referring to state and local tax deduction limits. Now, we have all the data from the first quarter of 2018 in for total home sales. If we compared the first 3 months of 2018 to the first 3 months of 2017, on the aggregate, total home sales are equal. The sky did not fall, and the housing market did not become ripe and start rotting after tax reform. Now, granted, the market in the first quarter of 2018 did not take off. However, it's not because of a lack of desire to buy a home or because of the increase in interest rates. This, my friends, has all to do with the fact that there's just simply not enough inventory out there. The market is hot. All we need is inventory, and we're going to blow these numbers away. Now, I'm not sure we're going to get the inventory in time to blow the numbers away this year. Now, I have an obligation and a duty to share accurate facts in the Martini Mortgage Podcast. But I also believe you, my clients, my real estate partners, and my listeners tune in here to get my opinion of the data. Many call this the Martini Factor. So here is the Martini Factor. I believe we're going to finish 2018 where we finished 2017. And 2017 was a good year. In fact, it is going to be a good year in all price points. As a matter of fact, let's look at the percent change in sales year over year in the upper end by price point. Between 500,000 and 750,000, those houses are not down. In the 500K to 750K price point, the percent change in sales year over year are up 4.5%. The next bracket is $750,000 to $1 million. They're up 15% year over year. In the $1 million price point, prices are up over 17% year over year. So let's not bring into this conversation that, the state and local tax reform being capped at $10,000 is going to impact the market. It's simply not happening in the lower or the upper price points in the U.S. market. Looking at buyer traffic, if we look at on the aggregate, it has increased. Buyer traffic from January, February, March of 2018 compared to 2017, based on data from showing times, we will see an increase in every one of those months. Wow. Friends, this spring market is not like any other spring market. It's better. You know what's also better is homeownership rates are better too. The first quarter numbers show for the first time in a very long time, homeownership went up pretty dramatically. Based on the data from the census, the homeownership rate in the U.S. for the first quarter of 2018 was 64.2%. Why this bounce in homeownership rates, you asked? Well, Gallup did a poll, and it still shows that American people see real estate as the best long-term investment. People see real estate as the best long-term investment, better than stocks and bonds, better than gold, better than savings accounts. People see real estate as the major long-term investment, and I do too. People want to buy a home. Right now, there is higher taxes on the upper income earners, and the recent mortgage rates increases have not slowed down the market, and it is my opinion, short of a war or a stock market crash. Please note, I'm saying a crash, not a stock market correction. The housing market has much upside over the next several years. Ladies and gentlemen, we need to stop listening to just the headlines and start looking at the facts. Yes, we have not blown the hinges off of the 2017 numbers. However, it's because of a lack of inventory, not because of a shift in market demand. We need to get any negativity out of our mind and realize when we look back 3, 4, 5, 7, 10 years from now, right now will have been the best time in history to buy real estate. I know what some of you are saying. Kevin Martini, you do not understand. Home prices are going up, and they are going up, and they're going up too much. Let me say this if you're one of those naysayers. Calm down, cowboys and cowgirls. If you are a real estate professional listening to the Martini Mortgage Podcast, or if you're a home buyer or a house seller, you have to understand a simple matter of supply and demand. Let's look at the facts. If we would look at the last 4 months, January 2018 to April 2018, and compared to the same period in 2017, you would see year over year, we would see each of those 4 months, demand of the amount of buyers out there looking for a house was up over last year. For January, February, March, and April, and the amount of supply, which is the listings available to buy, was down year over year. For example, or hyperlocal, in April 2018, there was 5.7% more demand of buyers than in April 2017. During that same period, there was a 7.2% less listing supply. Here is a Martini factor nugget. If you are in the market, no matter what you are selling, and supply is decreasing at the same time the demand is increasing, the price of that item is just going to go up. This is economics 101. This is good for home values. Let's look at what has happened to home values over the last 12 months. The actual year-over-year percentage price change for the United States was 6.7%. An interesting fact is that every state in the union increased in value. I also want to note that the great state of North Carolina had a 5.2% year-over-year percentage change in price. Here's another Martini factor nugget. There is no state in the U.S. worth less today than it was 12 months ago. Now, the past is the past. It matters what is coming in the future. So, what is the forecast moving forward? According to CoreLogic, they forecasted a year-over-year percent change of 4.7%. In addition, there is no state in the union that they predict will have a loss of value. Please note that there is no state in the U.S. that is projected to lose value. So, the level of appreciation last year was 6.7% nationally. The next 12 months nationally is projected to be 4.7%. And here's the Martini factor talking point. It's going to level off at one point. I can appreciate the fear of buying a home today and thinking it might be worth less in 12 months from now. It is possible, but not probable. Right now, many experts believe with the expectation of continued economic growth and further employment gains, this should mean the current rise in home prices is going to continue, but maybe not continue at the levels that it is or has been. It is my opinion right now, the news no one is really talking about is the fact that there's kind of a double market or a dual market going on. You see, it's all about price point. The lower end, prices are rising more rapidly than they are at the higher end. Now, that almost seems like, wait for it, obvious. Let me talk about change in price year over year with some data from CoreLogic. CoreLogic does something called the Home Price Index. That report shows demand at the lower end, first-time home buyers, move-down sellers. That portion, the lower price range of the inventory, is very strongly in demand. And the lower price inventory has gone up the most at 9.3% year over year. Low to middle on the price range is up 8.5% year over year. Middle to moderate prices are up 7% a year, and the higher priced homes in the marketplace are only up 5.4% year over year. That is correct. The higher price points are not down. However, the price change is not as dramatic as other price points. Wow. Simply put, first-time buyers make up an underperforming share of the market simply because there is not enough homes for sale in that price range. The inventory conditions improve in the higher price point brackets, which means folks trading up should see considerable interest in their homes as well as more listings to choose from during their new home search. Yes, here comes another Martini factor nugget. A person who is now sitting in a low to middle or a middle to moderate home, they're going to see more inventory in the next move-up home that they are looking to purchase. Am I describing you? Some are afraid that if they sell, they won't be able to buy something. Now is the time to act, folks. Right now, home values may be at the lowest point we will see in our lifetime, and also mortgage rates may be at the lowest level we will see in our lifetime. If you're waiting for a signal, this may be the sign you are looking for. Well, in the upper end prices in each of our markets, you can find something to buy. There's not a shrinkage of inventory. At this point of the podcast, I know there may be some naysayers still listening. These folks are saying bubble because home prices are at the same level they were in 2006. Even though it may appear that we're at the same price level in the peak, which was in 2006, if you account for the inflation, then right now we're actually 18% below where we were at. Right now, mortgage home loan rates are at their highest level since the week of August 22nd, 2013. And at the highest level of 2018. However, even though they are higher today, they are still at historic levels with the Martini Mortgage Group at Benchmark Mortgage. I'm a mortgage strategist, and I help people secure the lowest cost of borrowing, and I truly believe it is my duty, my obligation to help my partners I serve and the families I help create wealth through real estate. And that is why I created the Martini Mortgage Group. And that is what I do with this podcast. the Martini Mortgage Podcast. The Martini Mortgage Group at Benchmark Mortgage provides trusted advice based on facts in a stress-free environment with on-time closings. Thank you for taking the time to listen to episode 3 of the Martini Podcast. If you or someone you know has questions about mortgage rates or home loan products, know I and the entire Martini Mortgage Group are here to help. Again, thank you for listening, and until next time.
Thanks for listening to the Martini Mortgage Podcast with mortgage strategist Kevin Martini. Don't forget to follow us on Instagram at Martini Group and check out our website at martinimortgagegroup.com. Tune in next week for another episode of the Martini Mortgage Podcast.